Ladies and gentlemen, welcome. America is back. Our country is back. We are respected now. We've got some great deals coming. We are getting rich off tariffs, but the haters are still doubting this rally. Many haters. But you know who never doubted this rally? Chase from FinFluential. What a great man. He deserves plenty of likes. And look, this is just the beginning. Dow Jones 100,000 is coming, and many will miss the rally and hate themselves for it. I would hate myself too if all I did was short stocks and lose money. Losing money is for losers. America will never lose while I'm here. God bless America.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks rose on Monday with the Nasdaq closing at a fresh record high as Wall Street ultimately shrugged off renewed trade tensions and looked ahead to a key inflation report and the first wave of second quarter earnings. And on the back of today's trade, I would say things were fairly bullish, slightly neutral. There were a couple of outliers, a couple of losers, the biggest here being Nvidia and Apple, but that wasn't indicative of the tech trade. Google, Meta, Amazon, Tesla, Palantir, some infrastructure names were fairly bullish. Most of software recovering after the week they had last week. And we did start to see the early innings of a rotation from software into hardware. We'll see if that continues. But broadly speaking, a fairly positive day through and through. I mean, when you look at the sector analysis chart, you can see that most sectors were green, led by communication services, financials, real estate, weighed down by the energy sector, materials, gold as a whole, healthcare, and technology. With the S&P 500 slightly up today, ever so slightly, up 0.19%, but we were actually pretty red coming to open the day up. You know, we were down about half a percentage point, and then we actually put in higher highs, higher lows to finish pretty much at the highs of the day. Very interesting trade. Today was led by growth, large cap growth, mid cap growth, small cap growth. Factors that did lose were value. Small cap value down 0.1%, and then large cap value was virtually flat. You can also see here that mid cap value was pretty much a 0% return. This box should really be great. And then core, the sort of in between the growth and the value trade. All in all, a fairly mixed day, slightly leaning bullish, especially when you have stuff like large cap growth and mid cap growth green. You're going to see the markets drift to the upside. And this all comes off renewed trade tensions. Now, on the weekend, Donald Trump came out and said countries such as the EU are looking at 30% plus tariffs if they don't get a deal by August 1st. Trump also came out today and said that he is confirming a new weapons deal for Ukraine and threatens severe tariffs on Russia if the war doesn't end in 50 days. Those tariffs were in excess of 100%. It's just a bit weird, however, to go ahead and give Ukraine weapons as you're trying to sue for peace in that part of the world. I don't know what Trump's play is here. We'll see if he can get peace in 50 days. I'm highly doubtful, especially because he literally gave weapons to Ukraine. He's done a weapons deal with Ukraine. Now, Donald Trump is pushing through with his tariff agenda. He did unveil a new batch of letters today outlining tariffs on goods beginning in August. Now, the EU came out and said that a 30% tariff would eliminate EU-US trade. This was from the EU's trade negotiator, Sefcovic. But then Sefcovic also came out and said, we want to use every minute until August 1st to find a negotiated solution. In other words, they want to come to the table, and they most likely are. And that is why we saw the market just shrug off the lows we put on the day and essentially go to new highs, at least in the Nasdaq 100. And then after the close, Donald Trump came out and announced a $70 billion AI and energy investment package in Pennsylvania. At this event, this unveiling, participants will include BlackRock's Larry Fink, Alex Karp, Dario Amodi. And guys, this is telling you that AI is not going to stop. So he's going to unveil this package, I think later tonight or tomorrow sometime. But more money piling into the AI trade, and the AI trade simply not stopping. Now, there was some market movers today. Fastenal reported its earnings. It's one of the big industrial companies. They were up 4%, and that's because net sales rose 8.6% year over year, beating consensus. Daily sales climbed 8.6% too, beating the consensus as well, and earnings per share came in at 29 cents versus the 27 cents consensus. Very solid stuff here. A great great start for the industrial sector. And you can see the street was very bullish on this name. We did pair some of those gains, but net, very, very solid day. Meta was up 0.4% today, and that's because Mark Zuckerberg came out and touted an AI build-out plan, says he plans to spend hundreds of billions of dollars in data centers, adding up to 5 gigawatt of capacity. Meta, and they plan to do this through several data centers throughout the US. So Mark Zuckerberg really wants to get in the lead, stay in the lead. He's poaching AI talent, and he's pretty much saying to that talent, we have the compute for you guys to work. And that is why he's building out these massive, massive data centers. And on the topic of data center, Nebius, which is essentially a competitor to CoreWeave, was up 17%. I said this was one of my stocks to buy last week. And that's because Goldman Sachs initiated coverage of NBIS with a buy rating of $68. The stock ripped $7 today, pretty much going from like the $45 mark, $44 mark to where we are right now. Absolutely insane. Now, I did sell some puts at the $40 region. So those are going to expire worthless. I'll collect the premium, but I really wanted to get into this name. Unfortunately, we'll see how things go. But NBIS plan to reach 1 gigawatt of capacity by the end of 2026, generating $7 billion of revenue. Now, if we're to do the math and you would say 70% occupancy, which I think it's going to be closer to 100% at 5 times sales, you get like a $35 billion market cap. And the current market cap of the company is like 4 to 5 billion. So you're looking multiples on your investment. So this $68 target might even remain conservative, assuming that this company can go ahead and execute on everything that they need to. And then for everything we saw today, there was 3,400 advances, 2,800 decliners. We saw net outflows in both the Nasdaq 100 and the New York Stock Exchange intraday. But if you compare it to Friday, we actually saw net inflows net with the S&P 500 up 0.14%. The market momentum looking very solid. We continue to remain above the 50% mark, everything from the 20 to the 200 day. The 5-day moving average looking a little rough, an improvement from what we saw last Friday. Now, guys, looking at the charts, today was largely another muted day of trade with outperformance coming from the IWM, small caps, mid caps, and the S&P 600. The S&P 500 was up 0.14%, and the Nasdaq 100 was up 0.33%. So all in all, a fairly bullish day, and you can see led by growth outperforming value, and value stocks actually a little bit negative. We saw that with the heat map I showed you guys. European stocks were flat today, same with Middle Eastern stocks, and then Australian stocks were slightly up along with Chinese stocks. So it looks like Asia looking very, very good. Europe and the Middle East, not that great, and then sort of like flat here in the US. So, very bifurcated market through and through. Yields, the 2-year, 10-year, 30-year yield was slightly up. The dollar gained at the 98 level. This is something I've been saying for a while now, thanks to the TGA being refilled. And this is something I've been saying for the last couple of weeks. Ever since the budget bill, the one big beautiful bill, now the TGA is getting refilled, and we should see some strength in the dollar. Don't be surprised if we go ahead and see this at the 100, 101, potentially the 102 area. As a result of yields gaining, bonds, the TLT fell. Bitcoin was actually up 0.73%. And when you see the dollar up, Bitcoin up, it really goes to show the strength we're seeing in the crypto markets. Along with Bitcoin, we saw Ethereum gain as well. Gold was flat, and that's because, the market's rotating into these crypto assets, aka digital gold, and silver flat, WTI flat, despite some tensions in the Middle East going on right there. But I think that was way against, Trump really wanting to find a war between Russia and Ukraine. But again, selling Ukraine weapons and then saying we want peace, it's not really a good look. It doesn't inspire confidence on the Russian front. But let's actually go ahead and quickly talk about the S&P 500. Now, guys, here is a quick little chart I put up on my Twitter. Go ahead and follow me at FinFluential X. It's going to be in the description below, but just something I wanted to point out. You can see that this is the S&P 500 right here and global M2 money supply. And essentially, what we are seeing right now is that over the next week, right, if we actually do pull a little bit back and see a minor dip, that is to be expected. However, you ultimately want to be a buyer of that dip because global M2 money supply is telling us that the S&P 500 is going to march higher. So in the short term, we could see a little bit of a pullback. We could also just see a flat market, very similar price action to what we saw today, slightly flat, slightly bullish, right? But ultimately, guys, buy that dip because, the tailwinds for the market do mean we go higher in the medium term in the longer term into the end of the year. And then when we actually look at the gamma charts right here, you can see that these lines are indicated what the options market believe support and resistance zones are for the S&P 500. And you can see generally at the top end of the range, this does often act as resistance. So we could see a little bit of resistance right with M2 money supply telling us we could see a little bit of downside. I would ultimately be a buyer of dips at these lows if we do get there. Now, tomorrow is the CPI. If we get hotter than expected CPI, then we could potentially see some of these lows, the lows we put in last week or the week before. However, if we get an inline CPI, that could be a sell the news event, but that would be a buying opportunity. And if we get a cool CPI, we may as well have already put in the low for the week, and then we could actually see upside. I think if we get a cool CPI, this core wall right here will move up. Now, the core wall is actually like a magnet. We drift towards that level. However, once we get there, we generally acts as resistance, vice versa with the gamma flip zone right here, and then with the put support zone as well. But we are at the top end of the range. M2 money supplying, say we can see a little bit of weakness with us being at the top end of the core wall. That's definitely giving us a little bit of a bias, not downside bias, but we want to be a buyer of a dip this week, looking for upside momentum into the end of the year, guys. So do pay attention to that, but ultimately what's going to drive price action tomorrow is the CPI. It opens up before the market opens, so you don't have to predict what CPI is. You can just wait for it and then react accordingly. If it's cool, you know what to do. If it's hot, see where the market and see where if it's hot, see where the dust settles. It's a similar play for the Nasdaq 100, right? Wait for the CPI. But ultimately, M2 money supply is telling us we're going to move higher, not without maybe slight weakness this week. And weakness could come in the form of just trading sideways. That could also definitely be weakness. When it comes to the RTY, I am slightly more bullish. I do think that we are going to drift to the top end of this range right here, the 2300 area. And we continue to just see outperformance in higher beta names. Look at the IWM outperforming the Nasdaq 100, mid caps and small caps also outperforming the S&P 500. That's telling you everything you need to know. I do think we see the 2300 area sooner rather than later. Now, guys, looking at Bitcoin versus global M2 money supply, again, on my Twitter, go ahead, follow me at FinFluential X. We can see that we are tracking M2 money supply very, very closely. Now, we did say we want to be big buyers of Bitcoin right here, as well as at these lows, and we are getting paid in spades. We bought the mid 70,000 level. We bought the 100,000 level. And guys, upside target right now, 144,000 level. There will be volatility. Don't get me wrong. We will consolidate this move, but right now there is very, very clear momentum. Shorts are getting squeezed. Institutions are getting in. We're seeing retail FOMO, and this is going to take us to the $144,000 area in short notice. Now, guys, diving into sentiment, this is the weekend sentiment poll. We do it on this channel every single week, and I asked you, how are you feeling about the S&P 500 this week? Bearish sentiment right here at 46%. 36% of you were bullish, 18% at neutral. And to be honest, this is kind of what the market likes to see. When everyone's skeptical, there's dry powder on the sideline, fuel for the next leg up. Contrarian signals like this have a habit of catching people off guard. But if we can maybe just get one more week of bearish sentiment, maybe closer to the 50% mark, that is probably the signal to buy. This is often a contrarian signal. And the truth of the matter is you kind of want to remain long in this market simply because of two things. Earnings expectations continue to rise. Right, next 12 months earnings expectations are for $281 in earnings per share. 2025 expectations are for $263. You see this dip right here? That dip right there, that was the tariff tantrum. We're looking at close to $300 in earnings per share for 2026. This is for the S&P 500, guys. And as long as earnings continue to the upside and margins continue to expand and continue to print low teens, double digits, stocks tend to do very, very well in this type of environment. If earnings are growing, margins are expanding, stocks do very, very well. And that is why I say any dips we do get, any bearish sentiment that does accumulate in the market, use that as an opportunity to get long. But where does that leave us with valuation? Because ultimately, this is the most important part. The S&P 500 trading at 22 times forward, looking really frothy. The Nasdaq 100 trading at 28 times. So guys, if you are going to get into the market, definitely look at places like the equal weight or the S&P mid-cap 400. These are trading at very reasonable valuations relative to the S&P 500. But when you have the best companies in the world, Microsoft, Apple, Nvidia, Tesla, right? You're gonna pay up for those. And oftentimes the best stocks, you do pay a little bit of a premium. At the end of the day, when you look at the subsequent 6-month returns from those PEs, you can see a slight trend, but nothing definitive. So even though valuations do look elevated on a relative basis, doesn't mean we're going to have lackluster returns. In fact, if you just look at the earnings picture and margins picture, it probably means stocks do move higher. Now guys, looking at data for the rest of the week, tomorrow, right, we have inflation. We got the core numbers, month over month, year over year, as well as the headline. For the year over year figures, we're looking for 2.9 and 2.5%. And then for the month over month figures, we're looking for 0.2% respectively. Guys, I think if we get a hotter than expected inflation print, so if this prints 2.6% or more, or if this prints 3% or more, or if these are like 0.3%, I think the market's not going to like that at all, especially as it pertains to tariffs and rate cuts. So ultimately, market sentiment is going to be determined by this right here, the inflation numbers. We want an inline or cool inflation print. Otherwise, things can get very ugly in the market. Looking at data, tomorrow things really kick off. The JP Morgan, the Citigroup, Wells Fargo, BlackRock, State Street, BNY Mellon, all before the open, and then after the close, there isn't much of anything, just JB Hunt and Pinnacle Financial Partners. Those are the major ones, and then we have a star-studded week. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, leave a comment for the algorithm. Cheers.